Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, August 9th, 2025, we're diving into Ethereum, ETHUSD, which has seen some truly significant movements. First, let's unpack the recent news driving this momentum. Just yesterday, Ethereum dramatically popped above the key psychological and technical level of $4,000, setting a new high for 2025. Yahoo Finance reported the surge, coming off a broader altcoin rally. CoinDesk also confirmed Ether's rise above $4,000 in early U.S. Friday morning action. This is a massive shift from earlier reports, like one from A-Invest just 43 minutes ago, which stated Ethereum was stuck below $3,800, highlighting the speed at which this market can change. A significant bullish driver is the news of an unknown entity accumulating a staggering 171,015 ETH, valued at $667 million, over 4 days via custodial transfers. This suggests major institutional interest and potentially reduces immediate circulating supply, a very bullish sign. Furthermore, the DeFi sector is booming, with TVL hitting $270 billion and tokenized stocks surging 220% in July 2025, which underscores the growing utility and demand for the Ethereum network. While one Revolut Australia report shows ETH at $6,153, which significantly diverges from other current data, the primary market consensus and our provided chart data confirm the recent break above $4,000. This breakout is precisely what analysts were watching for, especially given previous resistance levels around $3,800 to $4,000. Now, let's transition to the charts to see how these events are reflected in the price action and what it means for your trades. Looking at the one-day chart, the long-term picture for ETHUSD shows a remarkable recovery after a significant dip in April and May of 2025. Prices plummeted from highs around $3,800 in May 2024 to lows near $1,400 in early April 2025. However, a strong rebound initiated in mid-April, steadily climbing and forming a clear uptrend. Notice the powerful green candle on August 8, 2025, which confirms the breakout above $4,000. This candle, closing at $4,009.38 with substantial volume of nearly 474,000 ETH, decisively broke through the prior resistance area, reinforcing the bullish sentiment. The earlier A-Invest report about being stuck below $3,800 was accurate for its time, as we saw rejection around that level multiple times in July 2025. However, the recent surge indicates strong buying pressure has finally overcome this hurdle, potentially fueled by the institutional accumulation and positive DeFi news. The price action suggests that the $3,800 level, which was a formidable resistance, should now act as a crucial short-term support. Below that, we find further support around the $3,400 to $3,500 zone, which acted as a bounce area in July. On the upside, after breaking $4,000, the next significant resistance is not immediately apparent from this chart's historical data, suggesting potential for further upside movement. Long-term analysts mentioned a cup-and-handle pattern on monthly charts, projecting a potential target of $8,000 by 2028 if ETH can sustain above $4,000. This current breakout is a strong first step towards validating that long-term optimistic scenario. Now, let's zoom into the one-hour chart to observe the finer details of this breakout. We can see the rapid acceleration in price leading up to the $4,000 breach on August 8th. The hourly candles leading into the break show increasing bullish momentum and volume. This rapid ascent indicates strong buyer conviction, moving past the lingering resistance at $3,800. The market is currently consolidating slightly above $4,000, which is healthy after such a strong move. Short-term traders should watch for any retest of the $4,000 level. A successful retest, where price dips to $4,000 and bounces off it, would further confirm this level as new support. Conversely, A sustained break back below $4,000, especially on high volume, could indicate a false breakout or profit-taking, warranting caution. The strength of the move is evident by the relatively high trading volume observed during the surge compared to the preceding consolidation phases. This suggests genuine buying interest, not just a short squeeze. Shifting to the 15-minute chart provides even more granular detail on the current price action following the $4,000 breakout. After the big surge, ETHUSD is currently trading around the $4,009 level, indicating it's holding firm above the key $4,000 mark. Observe the candles from August 7th and 8th. The rapid gains are clearly visible here. Immediate short-term support can be found at the previous 15-minute highs and around the $3,950 to $4,000 zone. For day traders, maintaining above $4,000 is key for continued bullish momentum. A dip below $3,950 could signal a minor pullback, but as long as the broader daily trend holds, these could be considered buying opportunities for short-term entries. The volume on these smaller timeframes remains robust, indicating active participation. Any reversal would likely be indicated by a series of lower highs and lower lows, accompanied by increasing selling volume. However, for now, the short-term structure remains firmly bullish following the recent monumental breakout. In recap, ETHUSD has just confirmed a significant bullish breakout above $4,000, marking a new 2025 high. This move is strongly supported by recent news of large institutional accumulation and the booming DeFi sector. Key price levels to watch are $4,000, which now serves as immediate strong support. A sustained hold above this level is crucial for continued upside. The next major support below that would be $3,800, previously a key resistance point. For short-term traders, look for consolidations around $4,000 to $4,050 or healthy pullbacks to $3,950 as potential entry points for long positions. The overall sentiment is strongly bullish in the short to medium term, with a high likelihood, 75 to 85%, of consolidation and further upside toward the long-term $8,000 target projected by analysts. This likelihood is reinforced if the current momentum holds and no major bearish macroeconomic news emerges. For the long term, the cup and handle formation points to significant growth, contingent on continued network adoption and successful upgrades. Always monitor trading volume and market sentiment for confirmation of trends, and consider setting stop losses around key support levels to manage risk. Stay disciplined and aware of broader market conditions. That's all for today's deep dive on ETHUSD. Don't forget to like, subscribe, and hit that notification bell for more insights from Explain the Charts.